Thank you everyone for joining. I know how busy it is this time of year. We hope that you find benefit in the things that we're able to provide for you. We are getting very close to the beginning of the season itself. So this is the latest and greatest in what we know as of today. So with regard to that, we're going to spend about half an hour going through some of the law changes and some of the updates that you need to be aware of. And as Justin said, feel free to ask questions and we'll go ahead and we'll address those questions at the end of the presentation. The whole thing should take less than about 45 minutes, at least that's our hope, because we know how valuable your time is. Let's go ahead and get started. The first thing that I would like to say is that, you know what, we did this presentation in November, but one of the things that has changed since then is we do know when the filing season will actually begin. I'm sure most, if not all of you are already aware of this, but the official opening of filing season for individual returns is Monday, January 29th. So it's not next Monday, but on Monday following, okay? And so let's go ahead and talk about what we're going to cover during this presentation. First of all, we'll talk about updated tax inflation adjustments for tax year 2023. In other words, what's the standard deduction, child tax credits, all those types of things. Then we'll talk about ramifications of the SECURE Act 2.0. We'll talk about the Residential Clean Energy Credit, which is Form 5695-1, Part 1, and the Energy Home Improvement Credit, which is the same form, only it's Part 2. We're going to talk about navigating Form 8936, which has to do with clean vehicle credits. And when we talk about clean vehicle credits, we're actually talking about new cars, we're talking about used vehicles, as well as commercial. On top of that, we'll cover updates regarding Form 1099-K for 2023, new reporting requirements for corporations, LLCs, and limited partnerships. We'll talk about revisiting, and this is very important, the employee retention credit. Some people have asked questions over the course of the last 18 months or so. It's important that we make sure everyone understands exactly what's involved with employee retention credit at this time. And we'll finish up talking about awareness of your responsibility to have a data security plan, which is oftentimes referred to as a WISP or a written information security program. One of the things that's very interesting is every single tax professional or business that's out there doing taxes has a responsibility to have this written plan in place. And we'll touch on that before we finish up the session today. So let's go ahead and get started, and we'll start with updated tax inflation adjustments. And the most important thing to understand is the standard deductions for tax year 2023 will be as follows. $13,850 for single or married filing separately. It's $27,700 for married filing joint or qualifying surviving spouse, and $20,800 for head of household. Now, the maximum earned income tax credits are as follows as of right now. And they are $7,430 for 3 or more children, $6,604 for 2 children, and $39.95 for 1 child, $3,995 for 1 child. Now, it's $600 for taxpayers without qualifying children, and the refundable portion of the child tax credit will be $1,600. Now, you may have heard a lot of information with regard to the child tax credit. One of the things that we need to make sure everyone understands is we are talking to you today, January 19, 2024, and potential changes to the child tax credit. This is what we can share with you. Currently, there is legislation that's being considered, and it could change the amounts and the refundable portion of that child tax credit. We know this. We're hearing it on the news all the time. However, note that this is still being negotiated in Congress. What does that mean to all of us? As of today, January 19th, the figures we've provided on the previous slide, they're accurate. That's what we can go ahead and tell people, tell your customers, your tax-paying customers as to what it is that they're entitled to as far as child tax credits are concerned. Should anything change, we will communicate any of these changes to our customers just as soon as we're aware of them. And I'm saying that this isn't going to happen this week or next week, but it could very well happen sometime during the tax season itself. Note that regarding any potential changes, the most up-to-date information can always be found in our Tax Resource Center on the CrossLink Tax website. And so let me go ahead and go in here very quickly, if I could, just a moment. And if I go to our CrossLink homepage, which is crosslinktax.com, you can always go to Customer Resources up here and the Tax Resource Center. As new information is made available with regard to any kinds of changes in legislation, we will always make sure we post here first. We may do other things as well. We may send out other ways of communicating, and Justin had talked about the different platforms that we can communicate to you folks through. And also we may do a training down the road. There are all kinds of different things, but we can always tell you that if you go to the Tax Resource Center, it's going to give you the latest and greatest that we know about. So I just wanted to make sure we pointed that out, because this could very well change. As of today, these are the numbers for the child tax credits, but we need to be aware that should changes be made, you can always reach out to CrossLink. We'll be able to give you that information. Now, continuing on with the inflation adjustments for this upcoming year, the next thing we're going to talk about is mileage rates, and this is per mile. For business purposes, it'll be 65.5 cents per mile. For medical or moving, 22 cents per mile, and charitable purposes will be at 14 cents per mile. Next up, we want to talk about Secure Act 2.0. And with regard to that, first of all, the retirement plan has some changes. The required minimum distributions for individuals must now begin at age 73, where before it was at 72. So people can hold those funds for one more year before the distributions have to begin. Individuals may withdraw up to $22,000 from the retirement account for federal disasters and do so without penalty. And the taxpayer can elect to have the amount withdrawn be taxed over 3 years. Now note, the tax credit for starting a new plan by an employer with up to 50 employees has been increased to 100% of eligible startup costs. So in other words, the entire amount is now eligible, excuse me, for employers that are providing this plan. Next, we want to talk about residential energy credits, which is known as Form 5695. And as I said before, there are going to be two parts that we're going to talk about. First of all, the residential clean energy credit, which is found on Part 1, Form 5695, Part 1. It's first of all non-refundable. It's calculated as 30% cost of qualified property installed in 2023 on the taxpayer's main residence. This isn't for rentals, this is for other secondary dwellings, but on their main residence. Unused credit may be carried forward, and examples of eligible property include the following: solar panels, wind turbines, fuel cells, battery storage units, and geothermal heat pumps. Also note, credit may be claimed every year that there's installed eligible property. So if somebody goes ahead and they make an installation one year of some solar panels and the next year some fuel cells, they are eligible to do it more or for each year that they do this. Okay, no lifetime limit on this credit except for fuel cell property. Now, we also have Part 2, and that has to do with the energy efficient home improvement credit. First of all, it too is non-refundable, and it's a credit up to $3,200 depending on the type of eligible improvements made to the primary residence. Heat pumps and biomass stoves, the credit is 30% of the cost, up to $2,000. Other qualified properties, it'll be 30% of the cost, up to $1,200. And there are limits for some types of other properties, such as doors, which is $500, and exterior windows, which are at $600. Next, we want to talk about the clean vehicle credits. And this is interesting because it's going to have to do with new fuel efficient cars or clean cars. It's used as well as commercial fleets. So let's go ahead and start with new clean vehicle credits. All of this we found on Form 8936. First of all, there's $7,500 of non-refundable credit for purchase of a new electric or fuel cell vehicle that's under 14,000 pounds. For electric vehicles, the credit is split into two $3,750 increments, and has done so as follows. So in other words, you're eligible for two different up to $3,750 credits, and they are as follows. The battery must contain at least 40% of critical minerals that are extracted and processed in a country which has free trade agreements with the United States. So that's for the first $3,750 that you're going to go ahead and be able to claim. And at least 50% of battery components must have been manufactured or assembled in America. That has to do with the second increment. Now, visit fueleconomy.gov to see if a specific vehicle qualifies for full or partial credit. It's the easiest way as a tax professional, is just have that available should somebody come in and want to make this claim on a vehicle that they have. Continuing with the new clean vehicle credit, the adjusted gross income is $150,000 or $300,000 for married filing jointly for current or the previous year. And price cannot be greater than $55,000 or $80,000 for an SUV or pickup truck. Also, for fuel cell vehicles, the full $7,500 credit is available when the requirements for being powered by a fuel cell are being met. And information on the vehicle will be required to be entered on the new Form 8936 Schedule A. And you'll notice that 8936, we're going to be making reference to this on multiple different occasions for each one of these, because it's the same form that's going to be used for new vehicles. You'll find everything on 8936 Schedule A. Beginning in 2024, so not for this one that you're going to be helping people with now, but going forward, if there's tax planning that's involved, the taxpayer can elect to transfer the credit to the dealership to use as a down payment for the vehicle. That'll provide some upfront flexibility for people that are interested in purchasing electric vehicles. Now, for used clean vehicle credits, the following is true. The credit is the lesser of 30% of the purchase price, or $4,000. The cost of the vehicle must be $25,000 or less. And the vehicle must be a model year that is at least 2 years prior to the applicable tax year. So in other words, for this year, because we're dealing with tax year 2023, the model year must be 2021 or earlier, the used vehicle, okay? Continuing on, the vehicle must be purchased from a dealership, so no private party to get this credit. The AGI limit is $75,000 or $150,000 for married filing jointly for the current or prior year. This credit can be claimed once every 3 years, and the credit is non-refundable. Finish up with the vehicle must be purchased for personal use. Again, as we talked about before, the information on the vehicle will be required to be entered in the same Form 8936 Schedule A. The last vehicle we want to type of vehicle we want to talk about is commercial. So the commercial clean vehicle credit is as follows. The credit is calculated as a percentage of the cost of the vehicle and has done so as follows: 15% for hybrid electric vehicles and 30% for electric or fuel cell vehicles. The maximum credit is $7,500 for 14,000 pound or less automobiles, which was exactly the same as we saw in the new credit or new vehicle credits, or $40,000 if it's over 14,000. Obviously, this has to do with commercial fleet. Credit is non-refundable. An unused credit may be carried forward. As we have said before, information on the vehicle must be, is required to be entered on the new Form 8936 Schedule A. Next up, we want to talk about updates to 1099-K. And this is kind of an interesting situation because there were changes that were supposed to be put in place for tax year 2023, but they have been pushed forward to 2024. And what this means is you may be getting some Form 1099-Ks from your customers that, you know what, may not be relevant for this year. But what happened was that the government has decided to change this by pushing this some of the requirements out a year. So what was originally in place as of last summer for 2023 will actually take place this next tax year. So more individuals will receive Form 1099-K this year. And because this was originally supposed to take place this year, you'll still see them coming into your office. But the reason for this was the reporting threshold for third-party networks such as Venmo, Cash App, etc. They'll eventually be reduced to $600. You notice that I put that in highlights. It was supposed to be for this year originally, and this is what you might have read over the course of the summer or early fall. But this has been pushed out, so it'll eventually be reduced to $600 come next year. This reduced reporting threshold was originally scheduled to go into effect for this year, just as I said a moment ago. Now, it is now scheduled to go into effect for 2024 with a phased-in threshold amount. So it's not even going to be down to $600 to start. For tax year 2024, the tentative threshold amount will be $5,000. So any transactions increasing up to $5,000 will be something that people will be then giving you 1099-Ks for, okay? Now for reference, for tax year 2024, so next year, 1099-K income that must be reported on return will include amounts from selling goods for a business and or providing services, income received from renting property, selling personal items at a gain, and 1099-Ks for sale of personal items at a loss, or when individual receives a 1099-K in air should still be reported this year on Form 1040 Schedule 1, and you'll see it on line 8Z and 24Z. So if people are bringing in 1099-Ks and doing so in air, you can go ahead and still report that on this year's return. And you'll find that again on Schedule 1, line 8Z and 24Z. By the way, just as a side note, you can always see Form 1040 instructions for further information with regard to this. Next, we want to talk about some new reporting requirements, and this is an important one as well. For all corporations, LLCs, and limited partnerships, please note that under the Corporate Transparency Act, so this was a completely different judicial system that was overseeing this, which was enacted in 2021, all corporations, limited liability corporations, and limited partnerships are required to file a beneficial ownership report with the Financial Crimes and Enforcement Network, and that's to begin 1/1 of 2024. So starting this year, every single corporation has a responsibility to do this, and applies to all corporations, LLCs, limited partnerships, and any entity that was created by filing a document with a state. So when people ask you, am I required to do this? The simple litmus test, if you will be, well, did you do paperwork at the state level to get this corporation put in place, or this LLC, or this limited partnership? If the answer is yes, then they will be responsible for filing this corporate transparent, this this beneficial ownership report. Okay, now companies already in existence, in other words, people that are existing before the beginning of this year, have until the beginning of next year to file their initial report. On the other hand, if it's a new company that's being formed this year, and it's done so after 12/31 or December 31st of 2023, they must file within 30 days of when they were created or registered. Now, next we want to talk about revisiting employee retention credit. You may have heard about some of this as well in the news. This is very, very interesting. This has to do with people that were making claims that they had people on payroll during the pandemic. And if they ask you questions about, am I still eligible for this type of credit, please note the following. First of all, this credit was made available to employers that kept employees on payroll during the height of the pandemic. It has nothing to do with people that are kept on board right now, but only during that time. So that would have been after the 12th of March of 2020 and before the first of the year in 2022. That's the period in which people could go ahead and say that they had people online, okay? Also of note, eligibility and credit amounts vary depending on when the business impacts occurred. Now, making a claim involves amending your Form 941. That's the employer's quarterly federal tax return for the period or periods in which the conditions for the claim could have been met. Carrying on this, currently the IRS, and this is so important to understand because they've even made statements this last week with regard to this, they have stopped processing new claims for this credit due to high instances of questionable claims being submitted. Furthermore, the IRS has emphasized that if a business improperly claims and receives employee retention credit, they will be required to pay it back. So one of the things is that be very careful if you want to go ahead and make a claim in arrears with regard to this. Note also, you can get more information on this by visiting our website, the Customer Resources tab, and our Customer Resource Center. We have articles pertaining to this. Again, in a nutshell, if somebody's asking for this, please make sure that as the consultant, as the professional working with these people, you are making them quite aware that if there's any kind of fraudulent claim that's being made, first of all, they're all being held right now anyway for evaluation, and if so, and a credit is given to you, you will be having to pay it back. I want to finish up talking about data security plans, and this is a very important piece as well for this year. Having a data security plan, or WISP. First up, by federal law, all tax preparers are required to create and implement a data security plan, okay? This is referred to as the Written Information Security Plan, or WISP. With regard to the Security Summit, which is made up of folks within the industry, partners created a sample security plan to help preparers, especially smaller practices, create a plan to help protect their data and information. In order to be WISP compliant, guidelines and specific requirements can be found on publication 5708. So let me go ahead and toggle into this very quickly. We have publication 5708 right here. You can go ahead and Google simple IRS publication 5708. And if you notice, as I go down here, it takes you step by step through creating this WISP, this Written Information Security Plan. So if you take a look at it, every single thing that you're going to need to know can be found in this publication. check out the following for further information as well. You can, as I said, talk about 5708, or there's also the data theft information for tax professionals, which is another article that can be found on the IRS website. Now, that brings us to the conclusion of what we wanted to cover today as far as tax law updates in advance of the season is starting, which will be a week from Monday.